All right, what's up, folks? This is Eric. I'm doing you in stock market homework in 60 seconds or less. No, I'm gonna do it in 6 minutes. I'm gonna try to do it in 6 minutes like we did on one of the other technical analysis charts. So this is December. We're gonna look at December the. No, we're gonna look at December the 6th. Today is December the 10th. All right, man. I've done this recording so many times it doesn't even make sense. But that's all right. Repetition is important. So we're gonna go to the 5-minute time frame, and we're gonna go ahead and open it up. Let's get some music on. All right. So the first thing that we'll pull out is from the pre-market is this little block here. Okay. So that's the most recent area of liquidity or something that we can pull out. So we'll pull that out. Pretty much what I've been doing recently is just looking at stocks, one day at a time. I'm trading intraday, so I'm looking one day at a time. If we were to look back way to the left, we can see a lot of data points. We can see a lot of price levels. That could make things confusing. I'm not saying that I won't look at them. I'm just saying that I'm trying to really observe and identify what's going on with the technical analysis on the intraday chart so that I can actually use all the data that's on the chart in front of me. I think you miss out on so many opportunities if you don't understand what's going on the chart on the intraday and you're waiting for price levels to show up from 2 months ago or something like that. So anyway, not knocking anything. I'm just saying this is what I'm working on for right now. I will surely come back around to the other way. I'm sure of it. All right. So what I'm gonna do is I'm gonna go ahead and screenshot this. We're gonna move it over to the tablet. And let's see if I can get you guys on the tablet. Okay. All right. So this is my tablet. Lock. All right. So like I said, we pulled up the block from pre-market. So the first thing is you don't know which way the chart is going to go, right? We know that. We don't know which way the chart is going to go. So we're just going to pull out that block from pre-market. That's a crazy looking shape. All right, so we got that rectangle there. All right, so the first thing we have is a bearish move down. That doesn't mean that it's going to be bearish all day. That just means that that's what's happening right now. And now the next thing that we have is a very curious consolidation phase. So you might think that it's going to move up into a bullish pattern, but first thing you get is a move down. And so then you're thinking bearish again, right? So you just don't know. And then not only that, but now you have a move to the upside, that candle. So now it looks like a tweezer bottom. Looks like it's going to go up again. All right. So you're still not making any decisions as of yet because nothing has kind of matriculated. Nothing has materialized. There we go. All right. But now after that move up, now you have a nice solid move down. Okay. And not only that, but you broke through the bottom of that consolidation zone and you broke through anything that was considered maybe a stop loss or something right there. So now we're thinking definitely bearish. Well, B stands for bullish too. Okay, so now we're thinking bearish. All right, let's get a black pen in here. So our idea for the day is bearish. Okay, now if it is bearish, we can't take this candle here because that would be the end of the bearish move. And one of the things that I've been having an interesting time learning and really working on, it worked well for me the other day, is that when the stock moves up, you don't buy it going up, you buy the pullback, right? So we typically want to think that when the stock goes up, you buy high and sell higher. Well, yeah, that's true, but you have to buy the pullback of the move up, right? Otherwise, your risk to reward ratio starts getting lopsided and you probably will either you'll have a very small risk to reward ratio or you'll get stopped out, or you'll just be sitting on the market too long that you'll get nervous. You probably pull out prematurely, and or it's just nerve-wracking because you're in the market so long. Because now as soon as you get it in at the height of the move, now you also have to wait for the stock to pull back. Yeah, you got in a position, that's fine, you got your place in line, cool. But now you watch all these people pass you first, and then it's your place, your time in line. I'd rather just kind of wait for the pullback and then get in as the line is moving. And that's the best way to do it. I hadn't got there yet. I'm working on it. All right. So like I said, here is the point, that long bearish bar. That's the point where we know something is going on. It's bearish. But now we got to wait for the pullback. So we're waiting for this level or this level. Hit that level, projected. Okay, so now we're saying maybe this is the level of interest. All right, when it hit it that second time, go ahead and take a short. Go ahead and take your entry. Okay, so you get in there, and then when it has this nice long bar here, that's not the bar to get in for another short. That's the bar to sell, right? And like I said, I've had a lot of trouble with that earlier on, especially, like I said, I primarily was trading penny stocks, cash accounts, that kind of thing. So I was long biased. So everything I was doing was going long. But when the stock was going up, I would buy that long bullish candle up. That long bullish candle was like, boom. I'm like, buy time, right? And I think that has its place, but that's based on your strategy. If you are doing breakouts from long consolidation phases, then getting in on that first breakout candle, like no matter where you get in, it's probably not a bad idea. Long consolidation phase. But if you're getting in like intraday on a short consolidation phase, that's 4 or 5 candles, getting in on the first candle in the direction that you plan to trade, probably not the best idea because it's got to retrace. All right, so that being said, you don't want to get in here for your short. You want to wait till it pulls back. Pulls back where, Eric? To that level right there. To that level right there. Okay, so that's your level to enter for a short. All right, and now you have a new level here, right? That's the next lowest low, and then you got this low that comes in there. So now it starts really starting to the problem with that for this kind of normal trending pattern is that you see how here you have this nice large bear through the zone. Nice large bears. These two together are a nice large bear. Okay, this here could be considered a decent size drop, but this area here did not drop much below this zone, right? So this zone here, this candle here didn't drop much below it. Whereas if you look at this zone here, this candle here dropped way below it. If you look at this zone here, or if you're considering this one, either one, these candles had a nice move below it. Okay, so that's significant. All right, so since this didn't drop well below it, I'm saying that the bearish move is fizzling. That's okay. That's okay. In order for you to start having a true bullish move up, you got to get rid of these large bears. This move here, this bearish move here, draws that zone. So in order to start going bullish, truly bullish, you got to get above that. Or if you were back here further on the chart and you were at this bearish candle, the chart needs to get above that bearish candle. Or if you were back here, the chart needs to get above this bullish candle and bounce on it. Or if you're here, the chart needs to bounce above this and go on it before it's still considered to be in an uptrend. Okay. And like I say, here you see it drop below. Okay, all right, so that's the 5-minute time frame. Let's look at the 1-minute time frame. I just wanted to point out something here. 1-minute time frame has evidence of a little bit of absorption, has evidence of a change in trend, a change in strength. To give you an idea when it's time to get out. All right, so we're going to copy that. Okay, open that up. Okay, so what I'm saying is here, as you get this drop through this range, now this volume here is a little bit higher, right? When you break through this range, got this drop here, that volume is higher than the rest of this, right? And here, remember, we're saying that it didn't it didn't really fit with the trend following behavior. And again, this volume here, none of this volume really moved up in a cluster type fashion. Okay, so that being said, what's happening, I may have said it before, but I'll say it again, as these buyers, booyers, these buyers buy in here and then they have a stop loss here, they get swept, okay, and then they start to sell. Well, what's happening here? Why all this volume right here? Well, that's because smart money is short covering. And in the past, I thought that, I'm gonna be completely honest with you, I thought that every time it moved down like this, people were buying. And people were buying. And people were buying. And it was just a matter of time before this thing went up. I guess in hindsight, it's just kind of like, I don't say it's gambling, it's just, I guess I just didn't have any idea what was truly happening in the market. Because that's not what's happening here. What's happening is smart money is shorting. But they're not shorting down here, they're shorting here. And as the stock moves down, now in here, they're short covering. So shorting means that they borrowed the stock to sell it. But in order to give it back, they have to buy it. Doesn't mean that they are buyers, just means that they are covering their prior position. They're covering the short. They do have to buy it to cover their short, but they're still sellers. Now, why market structure makes sense is because if you have people like me and probably some other people who don't really understand market structure that are willing to buy right here because they think that that's what happens, or they are what's it called? They are averaging down, right? They're just waiting for it to go up. They're in a bad position. They're holding the bag. So now they just need to buy a little bit lower so they can average down some. So when it goes up, they can get out or they can be profitable. They got in prematurely. So now they're just averaging down so they can get it a little bit lower. So when it moves up, they'll make a whole boatload of money, right? So there are plenty of buyers here, I assure you. Plenty of buyers here. Promise you they're buyers. I promise you they're buyers everywhere. Now the problem is with this shorting that's going on here. And I'm making it messy. I know. I want you to have to try to keep up. I promise you, I want you to have to try to keep up. This shorting that's going on from this level down to here, and this short covering that's happening here. The problem is, as smart money covers their shorts, they are still shorting the market. It's still in a downtrend. They don't want it to go up just yet. And they can control it. There's the algorithm, you call it manipulation, algorithm, trend, cycles, whatever. It's going down. It's not ready to go up yet. If it goes past or in too far into this zone here, let's draw it in blue so it makes sense. If it goes into this blue buyer zone, because we know buyers are here, if this goes too much into here, well, now these buyers are like diamond hands, baby, diamond hands. So in here you get diamond hands. And now all of a sudden, because you went too far into this range, now, and I drew it in red, because now all these people who short it now have to cover their shorts at a higher level. Well, to make money shorting, you have to cover your short at a lower level. You sold it here, you buy it down lower, and you keep the difference. Well, if you short it here, you sold it, and now you end up having to buy it at a higher level. Now you lose the difference. Now you owe the difference. Okay? So we need to keep the price below this diamond hand zone. We need to keep it. You know what? I'm on a yeah, that's gonna be my thing. I'm gonna coin that. That's gonna be called diamond hand zone. Yep. So if you get into the diamond hand zone, the DHZ, well then now it's no longer in the downtrend. Okay? And so then that's a good idea that the chart might be about to change the trend. But so if it does get into this zone, that's great. I mean, if you want a long, because now you just need to wait for it to get above the shorters, or the last of the shorters. You need to wait for it to get above them and then bounce on them, and then the buyers will come back in. There's buyers. There's buyers everywhere. There's buyers everywhere. People are waiting to buy. People are waiting to sell. So you just have to be at the right place at the market at the right time, and you have to be able to observe and know who's in the market and where they're likely to make their re-entry at. All right, so I think that's messy enough. I think that's messy enough. I want it to be good and messy. I think that's messy enough. Yeah, I think I covered everything. Yeah. And at the fear of going over something again, I won't go back into it. I'll just leave it at that. And with that, guys, I hope that you got something from this little technical analysis tour, if you will, because I'm still learning too. I'm having fun with it. You can see I'm having fun with it. But yeah, we're going to crush the markets, guys. We're gonna crush the markets. But when it's time, we're gonna be patient, right? We're gonna be patient. We're gonna be patient. We don't want to get in prematurely. We don't want to go long before we get above these bearish moves, right? We don't want to go long before we get above those bear moves. I'm just curious when we got above 455.75. Okay, so once we got above 455.75, and it did happen. Okay, so that happened around here. Okay, yep. And then what happened? We did get, well, I mean, you could stretch that up to the top of this level, and then that's exactly where this bounced at, like I said, for a threat of looking like I'm trying to make this perfect, I'm just gonna leave it where it's at. But you can see that though, right? You can see that this level here where the drop started, right there, is the same level over here where the chart sat back down, bounced on. Okay, so once we broke above that huge bearish move, that's when, and retested, that's when you get in. Boom. Retested, boom. All right, how high did it go before it? Okay, so it looked like it came back to that same zone even through a whole day, right? Through a whole day, it stayed above there. Through pre-market, retested into that zone. It said, yep, zone is still valid. And then it moved up. And then that's where we are today. And I've already done the technical analysis on the prior videos about what happened on December the 7th and the 8th. So today I did December the 6th, and yeah, I had fun with it today. So, all right, guys, this is Eric. I'm out. Peace.